Hello and welcome to another edition of StockWatch. As you probably heard in the news recently, shares of Alphabet, the parent company of Google, have risen by over 8% yesterday. And this is based on their Q4 earnings that have surpassed analyst expectations and showed a strong return in growth on its core advertising business. So Alphabet's revenue grew by 23% on an annualized basis on the quarter, and that's stronger growth than this time last year, which came in at 17%. And it's mainly due to advertising. The business sector is recovering well after a bit of a slowdown in Q2 when the pandemic really took hold of a lot of the companies. So, like I just mentioned, advertising revenue is up. A sharp turnaround in Q2 when the onset of the pandemic really took hold and obviously spurred advertisers to pull back on spending, and this caused an 8% annualized decrease in Google, and it was the first time they ever actually had a year-on-year decline, which is quite important as well. So YouTube ads were the main contributors, as this showed a 46% jump from this time last year, and also saw that viewers were spending a lot more time on certain videos than they were doing in the past. So that's very, very encouraging news for Alphabet in general. As I said, it's one of the biggest companies in the world, so for this company to keep spurring on is a good sign of a great economic recovery for 2021. Another company that I just want to touch on is Qualcomm, as the company has fallen short on their revenue in their first earnings report since a new CEO was announced. Sales were slightly lower than Wall Street as expected, and this sent the stock down 7% yesterday. However, Qualcomm did hit back to say that it's planning between 7.2 and 8 billion dollars in sales in the current quarter, a stronger forecast than analysts tracking the stock has expected. So it'll be interesting to see what 2021 will bring for both companies, Qualcomm in particular as well, as the chart will see shortly. So the last time I looked at Google stock, or Alphabet you can call it, we saw quite a big accentuation. We saw some hits on the trend line, and this has made another high point on the trend line. Whether or not if it's a false break, we'll find out in the next few trading sessions. As you can see here though, there is a strong long-term divergence on the downside, a bearish divergence, which could bring prices lower. I'm seeing probably in the next few trading sessions that prices could start dropping downwards like they have done on previous occasions where we've had a bit of a test to the upside long-term trend. However, we'll see what the analyst expectations are for the next quarter and Q2 as well. So this will bring in a little bit more fruition into where we're looking to go. So first of all, I'm just looking to cover the gap that it's made on the trading. So bringing it back just under 2,000 and then possibly driving lower up to these areas here. I always use the Ichimoku cloud just to give me a little bit of a insight into where certain support levels and resistance levels could be. So I'll be looking at this for the first support, well, the second support, because if it breaks this line, I'll be expecting prices to start going further downwards. So just something to look out for on a pullback on that stock. And Qualcomm, there's been a great accentuation on Qualcomm. We could even put it in a slight ascending channel for the best part of last year and this year as well. We saw this recent decline in the stock due to the headlines. Obviously, there is this strong bearish divergence as well bearing down on it, but we've had bearish divergences before in the past and it didn't seem to slow momentum any further downwards. So again, if we don't break out, I'll just extend this a bit more and zoom in so it's a bit more easy to see. So if we don't break down from this ascending channel, then I'll expect prices probably to start touching the mean and possibly test again at the high. So looking probably more bullish than bearish at the moment, even though we had a bit of a bad session yesterday. But, looking at the whole aspect of it, I'll be expecting prices to stay in this channel. However, if they do break out, then look for the lower end of the Ichimoku cloud, which is the top border, roughly about the $150 area. So this is all from the StockWatch today. Thank you very much for joining me. If you have any comments or questions, please feel free to add them to the post and I'll get back to you as soon as possible. Have a great trading day ahead and bye for now.